What's going on, everybody? It's Kevin here from Stock Hours, and today I'm going to be bringing you guys a video on how you guys can use technical analysis to determine if you want to scalp or hold on to a trade. Without further ado, let's get right into the video. Okay, so just a quick little lesson here on how the stock market actually moves. If you're a beginner trader coming into trading, you might expect things just to go straight up in your favor or straight down in your favor if you're shorting things. But if you've been trading for a while, that's not how the market works, and many beginner traders come to learn that. And yeah, trading is not that easy, right? Okay, so how the market actually works is based off of accumulation and distribution, which is basically just fancy words to say the stock or the stock market is consolidating before making a big move, right? So over here, you can see on this picture right here, it says demand zone, right? What this demand zone really means is that bigger investors and market makers are accumulating shares within a specific price area, price zone, which will later send price up to rally. This is what we call a demand zone. Now, it's the same thing for the supply zone, right? Bigger investors and market makers will accumulate shares before distributing all those shares back down, right? So accumulation, distribution. Now, why is this important to us when we're trading? As retail traders, we are not capable of moving a stock. It's impossible. Even if you have millions of dollars to use on a certain stock, you can't really move the market like that. A demand zone is basically a price area where buying interest is strong enough to overcome selling. A supply zone is basically an area where selling interest is going to overpower buying interest. Having this knowledge now, this can really help us determine when we're looking at setups on the bigger time frames if we want to choose to hold or to scalp through the level, right? So if I come here over to Thinkorswim on my charting platform, here's a perfect example on Apple today. If I remove this box right here, if we go back just a little bit right over here, you can see we had this strong sell-off, right? From on Apple from 250, we just basically sold off, right? And what did we do before 250, right? Starting from 249.50 all the way up to 251.94, basically all this stock did was accumulate shares before distributing them, right? Price came into the zone, decided to chop around for a little bit before making an aggressive move to the downside. This is something that we would call as a supply zone, right? So if I extend this box, we literally took this trade today, so this is literally a perfect example, right? Sometimes when you guys have A plus setups, depending on the location of price, even if it is an A plus setup, it might not be the best trade to hold through. And the reason is, just like I mentioned earlier, a supply zone is a price area where selling interest can overcome buying interest, right? So logically, if you think about it, if you were to try to hold through this 250 all the way up to this 252 zone, most likely that trade is not going to work out in your favor. And the reasoning why is because selling interest is overpowering the buying interest, right? So if you wanted to play this 249 break, right, flat top over here, great setup. Apple has been giving us divergence right off the open as of recently, and it's been a fun time, right? So if I pull this back, let's just say 249 was the level you were watching, you take this entry on 249, you need to scalp this trade. And why do we scalp this trade? Why isn't this a holding trade? It has the divergence, there's a flat top / consolidation break, so technically it's an A plus setup, right? And the reason why we scalp it is because there's a direct huge supply zone on the bigger time frame that we actually need to worry about, right? If you look over here, once again, the supply zone that I just drew consolidated before a big drop down, right? So over here, if you just physically look at the chart, it's very obvious that there's a lot of selling interest right around this price area, right? So if you wanted to take a breakout around this price area, you have to be extra careful when you're holding. Because most likely, if you're going to hold through the supply zone, your full profit target is not going to get hit. So even if it isn't A plus setup, the best way you can treat this trade is just to scalp it, right? So I'm going to go over another example, but this one is just like a puts example. So if I go to the chart on Amazon right over here and I zoom back just a little bit over here, you can see price consolidated before making a large move up, right? So this is going to be our demand zone. The demand zone ranges from the start of 209 all the way down to the bottom of the consolidation, which is around 204.66, right? So for example, if I wanted to play this whole number break on Amazon of 210, and I put this on the smaller time frame here, you can see if we get down to this 210 area, what happens when we get to the demand zone, right? We start seeing aggressive bounces towards the upside, right? So knowing that Amazon is a decent setup and that there's going to be a demand zone right below the level I'm looking at, then this is a big warning sign to me that I'm going to have to trade this trade as a scalp, right? So what are some trade examples where I can actually hold? And I'm literally right about to show you guys an example of trades which you can hold. So if I look at AMD right over here, let me just see this real quick, right? If I look at AMD right here, we have a demand zone starting from 108 all the way down to 106. Or sorry, basically 107 if you round it up, right? So knowing this, there's also a setup right here at 106 on AMD. It's a flat bottom / consolidation break, right? Why do we like this level? Because it's been tested multiple times, right? You can see right here, we tested it once during the pre-market, second time during the next day at the market open, right around here where the demand zone starts, it kind of touches that area as well, right? During the pre-market today, we also wicked off of that 106 area, right? So look at this setup right here, right? It's a flat bottom, which is basically usually one of the setups that we like to look at here in stock hours, right? Maybe there was divergence behind this trade. I'm not sure because I actually didn't pay attention. But if you pay attention here, the 106 break is a lot more easier and smoother of a hold in comparison to trades that have demand zones or supply zones right ahead, right? You can see if you take this 106 breakdown, this was a fairly relatively easy hold, right? Let's just say you wanted to target the 105 break, right? You clearly got that right here. 105 literally touched it spot on, right? And that's a crazy good play because if I took my entry right before 106 and I wanted my stop loss right before the prior lower low at 106.30, then, I don't even know what this is, but this is definitely well over a 2-to-1 risk to reward trade, right? So those are the things that you guys should be looking out for on the bigger time frames using technical analysis to determine if you actually want to scalp or hold a trade. Now, another example of this is going to be coin. And I know coin is a frowned upon stock in the chat, but if we go over this chart real quick, why is coin a decent setup, right? If you look over here, we have a whole number sitting at 210, right? That we haven't tested in God knows how long. I don't even know how long that is. But if you also check on this time frame right here, we actually have a gap starting from 213.74 that ends at 295, right? So in my eyes, this is an A+ setup to me, right? Also, take into account how there's no major price action between these levels, right? There's no demand zone. The previous demand zone was right over here, and we broke through that already, right? So we're playing a whole number break that has exited the demand zone and has a gap fill, right? So this is an amazing trade that you could possibly play and hold on to. Now, let's just say you wanted to take a $5 profit target on coin. If we go to the 1 minute time frame and check this out, you can see that this was actually a really solid trade, right? If you wanted to take the 210 break and there's divergence behind it, if you entered right at 210 and you had your stop right before the prior lower low, which was 212, around that area, this is a crazy trade you could have held on to, right? There's that gap fill, which means there's basically no price action recently in there that can get in the way of the trade. And second of all, we already made the exit of the demand zone, right? So there's no buying orders in this area that are overpowering the sellers, right? So in terms of holding this trade, it should be a lot more smoother than the trades that have supply and demand zones right in front of them, right? So this is how you guys can use technical analysis to determine if you want to hold or scalp a trade. I hope you guys enjoyed this video, and if you liked it, make sure to like, comment, and subscribe to the Stock Hours YouTube channel, and I'll see you guys in the next one. Peace.